Smart 24, driving business.
A warm welcome back to the show, and thank you for, of course, giving us your attention for these few minutes. We definitely won't disappoint. This is Smart 24 TV, and my name is Anthony, together with my co-host Gloria, and we are here to give you a little bit more insight into financial markets, together with Mr. Mutumba Collins, who is the Chief Executive Officer at Dollar Bill Traders. Remember, Dollar Bill Traders are found here in Uganda, founded by Mutumba himself and a couple of other very young, enthusiastic men. And they are offering services including financial literacy, including brokerage services. They help you learn more about these things before you get into the actual trading. If you're interested in forex markets, stock markets, cryptocurrency, definitely they are the guys to run to. Now, Mr. Mutumba, on the issue of brokerage, you've done us justice. You've mentioned exactly what we need to look out for. But in the first place, tell me about the types of brokers that I need to approach and what I should expect from each of them. From your own experience, the questions that you've actually got from the investors and the traders, what are those brokers that we need to know about?
Okay, so basically we have two types of brokers. Okay, they fall into two categories. You have the A book broker and you have the B book broker. So I'll start with the B book broker because that's like it's a bit more easy to understand. Basically, B book broker is what we call a market maker. So like you hear the term market maker, they're going to make the markets for you. So what this broker does is that you place an order with him and he's taking the opposite side. So in other words, he's trading against the client. So when you're buying, he's selling to you because he's betting that you're going to lose. Like you know the fact that over 90% of all traders lose money. I don't know if you've heard of that fact. So if look at it in the business side of things, let's say if you're a broker and you know that 90% of clients are going to lose money.
So you do the opposite of what they do. And you
exactly, because rather than placing your order with the market, he would rather take on that risk because he knows that you're going to lose over time. So if you have, let's say, like 1,000 traders and they all deposit like, let's say, 1,000 USD, you know that over a period of 3 months, all that money is going to be lost and it's going to go into your pocket. You get it? So the big book broker is basically taking the opposite side of your trade.
That sounds so cynical. How are such people like this? It sounds like they're taking advantage of people's losses.
No, not exactly, because it's a business, like I explained. So so different brokers have different models. Okay, you'll find that the hybrids, you'll find that other
those are probably A, B, S.
Exactly, and we'll look at those a bit later. Okay. But these are just business models that brokers have. So you could start your broker and you know what, my model is going to be B book because I know the traders in my region, these guys, because brokers will get licensed while targeting a particular jurisdiction. So perhaps if they know, let's say you go to a country that you know traders are not, like forex is not so advanced, or stock trading, people don't know much about these markets. You're going to use a model of B book because you know 90% of the traders that will lose money. So if they're depositing money, you know they're going to lose over a period of time. But it's also risky because now if you're a B book and then you find a profitable trader, he's going to end up giving you losses because you're paying him out of your pocket. You understand?
Wow.
So when you lose, the money is going to the broker's bank account, and when you're winning, it's a broker that is paying you, not the market.
Wow.
Okay? So that is a big book broker. They're basically filling your orders, or they're taking the opposite side of your trade. If you buy, they're selling to you. If you sell, they're buying from you. It's just betting against each other because they know in the long run, Antonio is not good, he's going to lose. So I'll end up pocketing that 10,000.
Wow.
Okay? Yeah, then we have...
So before you go,
yes,
I want to just really put it in context. I have $1,000. I want to buy euros. I'm hoping, because this is what I understand the forex market to be, I'm hoping that the euro and the US dollar, I have US dollars, 1,000, and I'm hoping that the euro is going to be stronger than the US dollar in this month. So I deposit $1,000 and I buy the $1,000 I buy the euro. And as the euro appreciates against the dollar, I sell and then I get a profit, right?
Yes.
Now, how I wanted to put it in terms of this broker, the B broker. So this is the big B broker. He has probably $1 million whatsoever, and there are a couple of us who are holding $1,000. Okay, who want to buy euros, and he wants to sell. How does it play out? How is it put in context?
Okay, so basically, like I mentioned, the B book, maybe to give you a more in-depth about B book. So they're going to give you an account. It's basically a demo account, okay? But it's going to look real. It will have the sign of real, everything is real, but it's actually a B book. Because what they're doing is they're giving you their own market to trade. When you're selling, they're buying, but you're basically trading a demo account. Now, the challenge with B book comes that, let's say, because their ideologies that most of the traders are not so good, so they're going to end up losing all their money. So what happens when a trader all of a sudden, because it happens, perhaps you've been losing for the past 2 months, you put 1,000, you lose it. You put 2,000, you're on B book, they just know you're funding for them, you're adding more money on their account. So all of a sudden, perhaps you're in the right side of the move, and you make, let's say, 50K, 50,000 US dollars. With big book brokers, you're going to suffer getting that withdrawal done. Because remember, this 50,000 is coming out of their pocket. You understand? So there'll be a lot of bureaucracy. Like, hey, our servers are down, please wait. Or they won't respond to you for like some time. That happens with big book because that's a loss on their books. You understand? Or they'll give you some reason like, we flagged your account for fraud, whatever it is. That happens with big book brokers, but not always. That doesn't happen all the time with some brokers, but it's something that you can come to expect with a big book because they're making a loss when you make a profit. So like you asked, let's say you have a number of traders and they all take the same trade and they all win. There's going to be challenges with withdrawing that money. And also you find that big book brokers, most of the time they manipulate the charts. So you will find that the price that you entered is worse than the price that is actually on different brokers. Okay, because they're manipulating their own market because they want you to lose and then they gain.
Wow.
Yeah. So that is big book. They make their own market and then when you lose, they gain.
Wow.
When you gain, they lose. So think about it as a trader. Watch is in the broker. Yes.
Okay. Yes, we can move on.
Okay, then we have what we call a book broker. Now in a book, these are brokers that just direct your trade, or they'll fill in your order to the market. Now they have, because remember, like I told you, B book, they're going to take the opposite side of the trade. With a book, you're going to have the broker filling your order in the market or finding an opposite order to match it with. So they won't take on the risk. Okay, they're giving the risk to the market. With big book,
so when you buy, they buy.
Yes. No, they're not buying.
Yes.
So when you buy, they're going to fill in your order to the spot market. You understand?
Okay.
In other words, they're going to carry on that risk to the market, not to themselves, taking the opposite side. You get it now? Yeah. So with a book, you're going to have different types. You have what we call STP, which is straight through processing. You have the ECN. Okay. Then you have the ECN/STP. Now, let's start with STP. STP is going to be, STP in full is straight through processing. So basically when you place a buy, that order is directly placed onto the market. Okay? So when you're selling, the market is placed directly onto the market. It's straight through processing. It's processed directly to the market. Then with ECN, ECN is basically info electronic communication network. So as a broker, they have different clients. So perhaps I'm buying and Antonio is selling. Okay? So they're going to match the two orders. You understand? So meaning when Antonio loses, I'm making money because the orders have been matched. You understand? That is ECN. Then you have the ECN/STP. So when they can't, like for example, if I'm buying a larger contract size than he's selling, they're going to match part of my order with his order. Okay, and then the balance is going to be processed straight to the market. You understand? So it's a hybrid of both. You get it?
Yes.
So we have STP. Remember, a book in general, they're not taking on any risk. They're just matching your order with a different trader or placing it on the market. Okay? B-book, the broker is taking on the full risk. If you're buying $10,000, it's going to sell it to you the $10,000. It's taking on the risk because it knows you're going to lose. A-book, they're not taking that risk. They're going to process your order to the market or match it with a trader on the network. So, how does the A-book benefit from this type of model? So, here is where you find commissions and you find spread. So, for example, like I mentioned, this market comes from the spot market, which is the interbank. So, they'll get that price and then give it to you at a worse price. You understand? Just to make that markup. Like I mentioned in the previous show, that you have a wholesaler and you have a retail seller.
Yeah.
So the wholesaler is going to go to, let's say, China, import at, let's say, a particular price, then come to Uganda and then increase the price.
Yeah.
Okay? So the same thing with the A-book. You get the price from the spot market, bring it to the retail market at a worse price. Then he makes his commission off there. Or what they'll do with, for example, ECN. Okay, ECN brokers, you will have a very low spread. In other words, the markup, the difference between the price on the spot market and the price that you're getting is very low. It can be even zero spread, or it will be like 0.1 spread. Okay, you understand me? So the spread will be very little. However, they'll charge you a commission. Like for example, if you're trading a particular volume, they'll charge you like $5 for giving you that raw spread. Okay, if you're trading a particular quantity, they won't charge you any spread, but there'll be a commission for filling your order at the market price.
Yeah.
You get it?
Yeah.
Then lastly, we have what we call the hybrid model. Now, hybrid is going to be the two types of brokers. You have the A-book and the B-book, both in this hybrid model. So how does it work? They'll get the profitable traders and put them on the A-book. Okay? In other words, your order is going to be directly placed on the market or matched with a different order. Then for the losing traders, these guys are going to be placed on the B-book because so, they know you're going to lose and then I'm going to make money. So when you look at the hybrid, it actually makes sense.
It makes sense.
So you get either the profitable traders on this side, you make the commission. Then the losing traders, you just take the opposite side of their trades.
I think we should only have hybrid. Sounds like it's playing out well for both sides.
It depends. Of course, I've never been a broker, so I don't know what their thinking is behind these different models, but that's basically how they work.
Yeah.
Yes.
Wow, it is just a lot in this, just looking at the types of traders. But in your own, when I look at the electronic commission network, for example, where you have matching of different, rather retail traders, where you have one buying, another one selling, and then you match them up, and then you make a commission out of that. What would you say about a novice, someone who is getting new in the market? Which kind of broker would you advise them to go to, at least for the start? Sounds like electronic commission network for me.
Okay, so you'll find that, for example, you'll find that these A-book brokers have higher commissions than the B-book brokers. Reason being, remember the B-book is benefiting mostly from you losing money, and the A-book is benefiting from commissions. So because they're filling your order with the market, they're going to charge you higher commissions, okay? Because this guy is willing to take on the risk. Of course, they'll have a spread, but then they're mainly benefiting from you losing money. So it will depend on you as a trader, like I mentioned before, because there are various types of traders. If you're, for example, going to be into the market for a longer period of time, I'd advise you to look for at least an A-book broker. Because remember, you're holding a trade for a particular period of time and your profit margin is probably going to be bigger. So you have higher chances of winning than someone who's scalping.
Yeah.
Because if you're going to swing trade, you're probably targeting to make like $2,000, $5,000, $10,000, whatever it is. And if you make that money, then you're going to have a challenge withdrawing that money. Yet you've held the trade for so long.
Yeah.
Okay, with a B-book broker.
Yeah.
But for scalpers, in most cases, you'll find that you'll find most of them on B-book, because B-book loves scalpers. Most scalpers lose money. That's just a fact. Because with scalping, you're looking at small time frames. The market is moving so fast, and it's very prone to market changes. Direction can change very fast in scalping. If you're looking at the 5-minute time frame, the market could move up and then in one instant drop. But if you're on a higher time frame, that's just a blip in the market. You won't even feel the pinch.
Yeah.
Okay, so it's going to depend on what your mentor is advising you. Like, you know what? We're using this broker for this particular reason. For example, it could be the spread. Their spreads are good, and it's good for our strategy as scalpers, or it's good for our strategy as swing traders. Okay, so it's going to be depend on your mentor. I can't give you advice right here. I'm not a financial advisor, but basically look for the right mentor to guide you on which you should use.
Yeah.
Yes.
Wow.
Well, where would I find the right mentor for this?
In the first place, you have one seated here, because I have an organization, dollar bill traders, who are willing to mentor you from A to Z, because some of the information that we're giving here is the basics that you need to have before you can even place $1 onto your account. Okay. First, you need to understand what are these markets, how do these brokers work, is the broker against me, how do I choose the right broker, do I have the right information, can I interpret a chart? So we start from A to Z. Okay, so if you're interested in learning this, please reach out to dollar bill traders. Yes.
Okay, for example, right now, like the way we have been said, like how do I choose between A and B?
Yeah. How do you choose? Well,
And how do I know that, okay, this is an A book, this is a B book?
okay, very
Do they have placards? Hey guys, I'm an A broker.
Yes.
Or I have a B broker. Or it's actually hidden. You have to discover.
No. You can actually, you see, with brokers, again, another thing I didn't mention is that they have what we call live support. The good brokers have live support, meaning I can communicate with the broker at any time, whether it's midnight, whether it's in the morning, whether I have a nightmare and wake up in the night, I can still communicate with the broker, because I have that live support 24/7. Okay, so if you want to find out more about the broker, okay, for example, if you're researching light finance, go to the client support. Okay, there's always that it's like a pop-up for live chat.
Yeah.
You can ask them questions like, okay, I need to find out what kind of broker, what's the business model for light finance. So they'll send you a document, because Africans don't like to read.
Yeah.
Because they'll send you like a full document. It has so many words that you have to read.
Yeah.
But if you really want to find out, you need to read that document.
Yeah.
Okay, that's there you find all the information you need to actually determine, okay, you know what, this is actually a B book. Let me look for a different broker, because I don't want to work with this broker. Or this is an A book, I want to work with a B book.
Yeah.
You get, so you have to read the fine print to find out which broker it is. But
So
to
what-
find
what
out,
are
you can
these
ask
people's
the live support.
transparency, the brokers.
Transparency. I think for A book, you'll find that they're more transparent than B book, because as you can imagine, the business model, if I'm taking the opposite side of your trade, I would prefer if you lose. So I could even manipulate the market so that you can lose. Remember, I'm providing my own price to you as the B book. Okay, like I mentioned, they give you an account which is a demo, but it looks real. So in there, they will either give you the exact price in the market, or they will manipulate it at certain points. So you find like at night there was a spike in your chart. You go to like a different broker, there was no spike. That is very common in market maker brokers, because when you lose, he's gaining money. So he can manipulate the market for you to lose, and then he earns that money.
Wow.
So the transparency in B book is less than that in A book. However, most brokers are mostly transparent, especially if they're regulated.
Okay, like Antonio, why would you go for a B book?
I would go for a B book, first of all, because I think they give you a lot more risk, and I think the return is bigger. I don't know what you think, but when I look at the mode of business they offer, the higher spread and so on,
Yes.
I think they give you higher returns. In case you get the return, it's higher than the A broker, because the A broker is giving you a small spread and is limiting you, and then the commissions and so on. But this guy, when he hits the loss, you're going to make huge amounts of money, it looks like.
Yeah, actually what you mentioned is true. You'll find that especially with the spread, in most of the market maker brokers will have variable spreads.
Yeah.
Okay.
Yeah.
So variable meaning when there is high volatility, the spread will widen, and when there is low volatility, the spread will narrow. But with the A book, you'll find most of them have fixed spread. So regardless whether there is high volatility or low volatility, the spread will remain the same. So for example, let's say if you're trading in a time when there's no volatility, meaning the market is not moving so fast, so you can enter at a very low spread. Okay? But with a A-book broker, you'll find that the fixed spread, let's say it's 5 pips or 7 pips. So it's fixed, you're already losing 7 pips before you even actually make money. So
Wow.
the different advantages and disadvantages. Okay? Yeah. But like I said, it's going to depend on what kind of trader you are and what you're looking to, what exactly is your, like what kind of trader are you in this market. That's going to determine what broker you choose.
Mr. Mutumba, this is an increasingly digital age. And even in Uganda, I've seen, for example, the brokerage I'm used to, the stock brokerage at least, in our case has changed. We used to have to go to the stockbroker's office, you get a certificate or something for one share like this. You buy a share, for example, in Stanbic, and then you carry that paper around. The moment the rats eat that paper, you forget about your share, right? Because it had the kind of a seal for verification and all that. How has brokerage changed in, especially the forex markets, in as far as getting to know, for example, how much you're holding, getting to access your portfolio just to check out how your portfolio is doing? Has there been any improvements?
Okay, so the very nature of forex brokers is that everything is online. So you create your account online.
There's no need of any physical engagement whatsoever.
There is no physical documentation.
Wow.
Because of course with their security they have KYC. That's of course know your customer to prevent those are anti-money laundering measures that are placed on brokers by the regulatory bodies, like I mentioned, the license. So basically everything is online. So if you're verifying your account, you're going to submit like your national ID, you're going to submit your bank statement, whatever it is that they require from you. Then if you're depositing money, of course you're going to send money to the broker, then they're going to credit your account. So everything is online. So for you to see your portfolio, again, there's a software, like for example, some brokers will have a web app. Some you will need to download an external app like MetaTrader 5, MetaTrader 4, or you might need TradingView. So on those applications, those softwares, you're going to watch your portfolio as it grows or as it diminishes. Okay, so everything is online. There's no need for a physical document that you have this paper. Okay, I bought your USD, here's my contract. No, it's going to be onto the software, the system. You will see that, okay, you have this amount of contracts on this particular asset, and right now you're in this profit or you're in this loss. And you can also see your transaction history to see that, okay, I made money last week or I lost money this week, whatever it is. Everything is accounted for online. Yes.
Basically, if you don't have data, if you're not an online person, you cannot engage in this kind of thing.
You cannot trade the financial markets if you don't have internet and a smart gadget.
Wow.
Yes.
In Uganda, how do these brokers provide like guidance to clients during these economic uncertainties?
Well, the very nature of the broker is to, first of all, they're looking for clients.
Yeah.
Because the more clients they have, the more money they will make.
Yeah.
Of course, now you'll find some brokers who offer free education for traders. And a number of brokers right now in the country are offering that. They're giving clients education so that you can learn all this for no cost at all. The reason for that is because they're generating their own market. If I can teach Anthony for free, I know once I tell him now you've learned everything, he's going to put $100. You get it?
Yeah.
So it's up to me. If my model is B-book,
yeah,
I'm going to put Anthony on the B-book because I know he will lose. You understand? So that $100 is already mine. And he has paid for his education.
Yes. I think when I learn about B-book, I wouldn't start with B-book. If you were B-book, I would say, okay, I think I'll come back later.
Yes.
But then, in Uganda's perspective, you talked about Capital Markets Authority not licensing forex brokers. What would be your word to the regulators, because they're also watching this show, and there are improvements needed in the market? What would be your word of advice?
I think what we need is regulation of these brokers, because it brings about security for a trader. If I know that a broker is regulated by the Capital Markets Authority, I know that my funds are secure, because these brokers can disappear, especially the market maker. Like I mentioned, You can, let's say you've been a losing trader all your life, all of a sudden you've made $100,000. Then the broker is going to give you some sort of story like, you know what, we can't pay you because of this, etc., etc. But if this broker is regulated or licensed by CMA, I can carry on my complaint to CMA and I know I'll get my money. You understand? Because the requirements that they need from this broker, there's some money that they set aside for clients' funds. So in case the broker fails to pay, I know CMA got my back.
Yeah.
You understand? So it's a good conversation to have. And like I mentioned, our neighbors, Kenya, now regulate forex brokers. I think it just adds more security to a trader's, you feel more secure that, you know what, CMA or my jurisdiction actually regulates this particular broker. But like I said, it's not so important to be regulated in Uganda as long as this broker is actually regulated by some of these these strict nations.
Yeah.
So like for example, if a broker have FCA,
yes,
I would trust them more than a broker that has, sorry to say, just the CMA of Uganda, because this broker can disappear at any time. Understand? Though it still gives me some more security to know that actually at least my funds are secure because the CMA recognizes this broker.
Yeah.
But you find that regulated brokers in most cases have the worst conditions than the brokers which are not regulated, because there are lots of requirements
for you to become licensed.
So in other words, for them to make back that money, they have to have high charges.
Yeah.
You understand? But for unregulated brokers, you find the charges are low.
So are the losses.
Yeah,
I doubt.
The losses, of course, it's going to depend on your clients and what model you're choosing. If you're B-book and most of your clients are winning, then you're not in business. You're basically losing.
Sure.
Yeah, that's when you find brokers disappear after some time with brokers' funds, or they'll manipulate the market.
Thank you so much, Mr. Collins, for the wonderful insights on brokerage. And I've been Anthony Sebale with my co-host,
Gloria Nampicha.
Yes, and we're very glad that you joined us. You can catch more of this feed if you missed anything on our YouTube channel at Smart24 TV. We have, of course, this content there. You can also follow us on Twitter and definitely follow up with the comment section. You can always give us feedback and we'll be able definitely to answer all your questions. Thank you once again, Mr. Mutumba, for honoring the invite.
Thank you. Thank you very much.
There you have it. We shall continue having some more of these educational programs, and they will be weekly, and we definitely will be giving you more insights. So stay tuned, and more business is coming ahead at Smart24 TV. I'll catch you later. Bye for now.
Smart24